Mr. Sharma, who is Vice Chairman Managing Director of Sobha Limited, joins in to talk about their numbers. Mr. Sharma, it's great to have you on the show. It's been a very impressive set. Sales growth of 30%, profit growth of nearly 40%, and EBITDA growth of about 13.5%. Are these numbers sustainable? Are you looking at being able to gain more market share in a tough environment, visibly seen, with what's happening on the financing side, lenders, NPAs, the ability to service credit? You've been managing to show up good numbers.
Thank you for your compliments. We do believe that in this kind of a tough environment, we have a headroom and scope to grow further, and we are working towards this. We also feel that this financial year also, the kind of growth momentum what we had shown in the preceding financial year, it should be sustained. We are conscious of the challenges ahead, but at the same time we also are aware of our strength, our business model, our ability to complete projects on time, and then the basic inherent margins what we have in our ongoing projects. It gives us that kind of a confidence that the kind of performance what we have shown, it may get repeated in this financial year also.
Okay, hi Mr. Sharma. Yes, congratulations indeed. It's been a very good quarter and a year for you. You've been able to do very well over there, and it's encouraging to know that you seem to be reasonably sure of being able to repeat that performance. I think you reported a 30% pre-sales jump in FY18, and like you said, there are challenges, and despite market slowdown, would you attribute this to only your company itself? Because the industry in general was quite weak. So what is it that you'd attribute this kind of pre-sales jump to?
See, primarily two reasons what we would like to attribute towards this kind of a performance. One has been that the kind of hold what we have in our core Bangalore market, where we have been able to sell products across all categories. It has indeed helped us to ensure that not only we protect our home turf, we have gained significant market share in this market. At the same time, what we have seen that the business model what we use, the backward integrated business model, it has also helped us. This helps us on the one hand in completing all the projects on time. We are able to think about the scale. At the same time, it has also started delivering a good growth traction. If you look at last quarter, we collected almost 900 crore from our contracts and manufacturing division, and it also gives us almost 14 to 15% margin. So net the business model and the ability to protect and grow the Bangalore market, it gives us the confidence that with the new project launches, this financial year also, we should be doing relatively better.
But channel checks suggest that Bangalore as a market is seeing a scale down of almost 34%, but your volumes have been up 15%. How have you managed to beat the market?
As we said, the geographical reach in Bangalore, the kind of products, the categories of the products, the pricing, the way we have become relatively more aggressive in our sales promotion activities, connecting with our customers on a regular basis, it has helped us to send a strong message across all the consumers that if you need to buy a home and you are looking for a home, whether it is north, south or east, you can always look at a Sobha property, and it has helped us in sustaining this kind of a volume growth momentum.
That's very encouraging to know. How has the margin mix been for you in terms of higher and slightly less margin accretive projects for you going in FY19, and how do you see the mix playing out for you in the future?
See, we are selling across all categories. If you look at the price per square feet in the last financial year, it has also grown significantly. So on a smaller volume growth, the value growth has been more significant. So this is helped because the high value items also have been growing. If you look at more than 1 crore category products, that constitutes almost 2/3 of our total new sales. So we remain confident that there are customers for the high value products also. At the same time, the new category, this affordable home, it brings more volumes, and there also we are somehow able to manage the margins, because the lands on which these projects are coming up, they have been bought at a lower cost, and which protects the margin, and we are being able to ensure that the pricing remains as well quite competitive. So the mixture of having a good product mix, most of the products owned by us, and the way the volumes had expanded helped us to protect the cash flows as well as the net margins. That is the story in short we can say about Sobha. The reduction in the debt also has helped us quite a bit, and we have now that kind of a headroom where we can chase growth without increasing the interest cost outflow.
Finally, Mr. Sharma, how did the commercial space pan out, and any REIT plans for you?
Here we are too small a player. We will have one St. Mark's Road property coming up for lease in this financial year, and we will be also launching couple of new projects in the commercial space in this financial year. But yes, this segment also we are looking at more seriously, and maybe in 3 to 5 years from now, some kind of a relevance we believe we will also have in this segment.
Mr. Sharma, really appreciate you giving us your time on the show, and congratulations once again. It's been a great set of numbers. The stock, however, a bit tempered today and trade down by about 2% odd.